Thank you all for coming today to Kiss Your Landlord Goodbye. We're going to give you a whole bunch of information that we don't expect you to remember. You'll be able to reach out to any of us individually to get more information. My name's Jane Hewley. I'm with the Noble team with eXp Realty. I'm a realtor, so I'm the crazy person that drives you around to look at houses. First up today, we have Miss Bonita Grant. She's going to talk to you about all the woes of credit and what you do if you've gotten yourself in a little pickle, and she can help you do that. So I'm going to leave it to her, and we'll get the ball rolling.
Thank you. How you guys doing? Wonderful. Okay, so perfect. Thank you. Can you put it on Credit 101? Can you click on that? All right, so my name is Bonita Grant, and I own Cure My Credit Scores. And what we do is we help clients get their credit scores up to a 700 or greater in a short amount of time. And the way we do that is we dispute the negative items on your credit report, but we're really big on education. I was a teacher for 10 years in the DC public schools, and so I just think that, the more we're educated, the more we can win. And credit, we're judged on credit, but they don't teach us how credit works. So I want to just go over a little bit about credit. Can you click on it again? Maybe if you go back, there's a section.
It's not
Oh, it's not online here. Oh, okay. Is there another slide? Okay, perfect. This is perfect. That's what I want. All right, so let's go over how your credit score works, right? And this is really good. Like, take notes on this because I really think that it's crazy that they don't teach us this, okay? So please teach your kids, your grandkids, and everyone, right? So your credit score, it ranges from 350 to 850, comes from a complex equation called FICO, and you really have to be a PhD in math to break down FICO. So they break it down into these 5 categories so you can really understand it. Now, the first category is payment history, and that has to do with how you pay your bills. So anything negative on your credit goes into this 35%. So if you have a late payment, charge-off, collection, foreclosure, bankruptcy, anything negative goes into that 35%. Now, what my company doesn't matter if it actually was your late payment or anything like that. There's a law called the Fair Credit Reporting Act that says that everything on your credit report has to be 100% accurate, reporting timely information, and verifiable. A lot of times they throw this stuff on your credit report and they don't follow the rules to keep it on your credit report. So what we're doing is we're challenging them. We're like, prove it. Show me my signature. Show that this was actually me. And a lot of times they don't have it. They just throw it on there. And so it has to come off your credit report. When we get stuff off your credit report, it is off your credit report and it's not going to hurt your scores anymore, but we're not erasing your debt. So if you go back, like I had a client and we got this T-Mobile removed and it was like $1,700 and the credit scores went up and then they saw like an ad for T-Mobile and went back to T-Mobile and they know the laws just as much as we know the laws. So they said, okay, your credit looks good, you can get another T-Mobile, but you have to just pay $5 on this old bill that's in our system. So he paid the $5 on the old bill. 2 months later, that bill shows back up on the credit report, $5 less, right? Because it's now a new collection because it has a different balance. So I always say just go to Sprint, okay? Just go somewhere else. Or Verizon, right? So we get it off so that it helps you so that you can buy your house, okay? Now, the way that you can help this 35% is whenever you have an open account and you're paying it on time, it positively affects this 35%. But it's not an equal playing field. They want you to be in the 98th percentile in this 35% in payment history. What that means is if you have 100 on-time payments, like you have 100 on-time payments with your credit cards and your auto loans, it adds up to 100, and you get one late payment, your scores may drop 20 to 40 points, right? Because then you're down into the 99%. You get 2 late payments, your scores may drop 80 points, right? They want you to be basically never late, okay? So that's 35% of your score. The second biggest part of your credit report is your credit cards, okay? Now, if you don't have credit cards, you're automatically missing out on this 30%. It's kind of like if you were in class and the teacher said the final exam is worth 30%, you can do well in every other part of the class, but if you miss the final exam, the most you can get is a 70, is a C. You cannot get A+ credit unless you have credit cards. But it's not just about having a credit card, you have to keep the balance low, okay? So if let's say I got you a $1,000 credit card and you went and spent $500 on this card, you'd be at 50% utilization. Anytime you're above 30% utilization, it hurts your credit. Anytime you're above 30%, it hurts your credit. The closer you are to the limit, the more it hurts your credit. If you are over the limit on a credit card, it hurts you as bad as a bankruptcy. That's how it's 30% of your score, okay? So a lot of people, they come to me, I don't know why I don't have good credit. I paid my credit cards on time. Your credit card payments go into that 35%. Your utilization is all of 30%. So when you're buying a house, you want your credit cards to be low. I'm talking like way below 30%. You want your credit card balances to be in the 10% range. So if you have a $200 credit card, that means no more than $20 you're spending on that card. If you have a $1,000 credit card, no more than $100. Now I know you're like, I see the faces, you're like, what's the point if you have to keep the card so low? They're testing you. They're testing you and they're saying, okay, we're loaning Bonita $1,000 this month, right? If she needs 500 of that, like maybe she needs that to pay bills, like maybe she's not all the way financially secure, right? But then you're asking them, can I have another 300,000 to buy this house or 500,000 to buy this house? They want to see that you can manage the $200 or the $300 before they give you the big money. So when you are looking to buy a house, buy a car, buy anything that you have to do with your credit, you want to get that card down ASAP. Because when you look at your credit, sometimes your credit is like a month behind. So you can't wait until you're about to buy it. You got to get it down right away. Now, I say between 1 and 10%. They're tricky. These people are tricky. Once you're below 1%, it's neutral. It's no longer helping you. I've seen people pay their cards down to 0 and lose 50 points on their credit report. I know, it's tricky. So the goal is 1 to 10%. So if it is a $300 card, between $3 and $30, right? If it's a $1,000 card, between $10 and $100. Now, a lot of people always ask me, well, my grandmother pays her card down to 0 every month and she has 800 scores. Whenever your credit card is older than 7 years, you've had that card for longer than 7 years, they trust you at that point. Then you can pay it down to 0 and keep it at 0. But when your credit card is younger than 7 years, they're testing you every month and they want to see that you're actually using it, keeping a small balance, but not overutilizing that. Yes? Yes, very good question. They count each card individually, and then they count all the cards collectively. So if it is a store card, the other exception is if it's a store card, a card you can only use at that store, like a Macy's card or a gas card, you can keep those at 0. It's cards that you can use anywhere that you want to keep a small balance of between 1 and 10%. So if you have a card that you can use anywhere and you have it at 0, just know that you're missing out on some points that you could possibly be having, okay? And you don't have to get it all the way to 10%. You can have it at 2%. 2%, you'll get more points than having it at 10%. But once you go under 1%, then you lose those extra points. Did I explain that well? Okay, good. If you maximize your credit cards, I'm telling you, I've seen people jump 100 points in 1 month by getting their cards down to that sweet spot. Okay, and keep it there. A lot of people are like, okay, I'm gonna charge it up and pay it down before the bill is due and I'll be fine. You actually don't know when they're gonna report the limit and the balance to the credit bureaus. They switch it up each month because they don't want you to figure it out. So they may report it on the 15th this month, the 15th the month before, and the next month they're gonna report it on the 2nd. So you don't know. All right, 15% of your score is your length of file, how old your credit is. Looks at all of your open accounts, and anytime they collectively add up to more than 7 years, then you can get to the 800 scores, okay? So the older your credit is, the higher potential scores you can have, right? So collectively, meaning like, let's say you have a 5-year-old credit card and a 1-year-old auto loan, right? Those are the only two open accounts on your credit report. 5 plus 1 is 6. You divide that by 2 because there are only 2. That means your credit is 3 years old, right? Everybody, 3 years old. That means your credit is 3, right? Once it adds up to more than 7, then you have the opportunity to be in the 800 scores, okay? So that's what we tell people, never to close credit cards. The reason why is like when you pay off a student loan or a mortgage or an auto loan, when you pay it off, it closes. You lose, the mortgage. You lose those 30 years of positive history. When you pay off a credit card, it doesn't close. You can keep credit cards for 40, years. And so you never want to close a credit card because that's how you get your credit to get to the 800 scores. You need old debt that stays on your credit. Did I explain that well? Go ahead. Yes, it will hurt. Yes, it will hurt because remember you're losing. So let's say we're going back to that same analogy, a 5-year-old credit card, a 1-year-old auto loan. And let's say you stop using that 5-year-old credit card and then they closed it. So now your credit moves from being 3 years old down to 1 year old because now that 5 years left your credit. So if you're looking at loaning somebody money, if they had a job for 3 years versus someone who's had a job for 1 year, who would you loan it to? Like someone who's more. So yes, you want old stuff. Now, the reason why credit cards sometimes drop off your credit report if you don't use it is because when they loan you that money, they have to take insurance out on that money. So if they loan you $500, they have to have an insurance plan on that $500. That's what the charge off is. They're charging off to their insurance, right? So if you're not using the card over a long period of time, they're just wasting money. And so they start to cut people's cards. So I always say, try to use your card at least once a year so it doesn't shut down. Yes. Yes. Very great question. These are good questions. You guys are on it. Okay. So I think, okay, so that goes to the next one. New accounts, right? They want you to have multiple accounts. So at minimum, you should have 2 major credit cards, 1 department store card, like 1 store card, and 1 installment account. That's like a mortgage, an auto loan, or a student loan, okay? Now, so I'm giving you the whole circle of your credit, right? So don't just hear the part where I say you need to have 2 major credit cards because sometimes you can actually have 1 major credit card and buy a house. And we don't want to just like throw stuff on there if it's not necessary. We throw more cards on after we buy the house, okay? So I love credit cards. I don't know, I think I got like 26 at this point. But I have business credit cards. I do not get any more personal credit cards because every time I get a new personal credit card, it lowers my length of file, right? So same analogy, a 5-year-old card and a 1-year auto loan. I go on Credit Karma. Credit Karma always gives a great suggestion of getting a new credit card. If I get a new credit card, now I have 3 accounts. 3 divided by 6 is 2. So my credit would drop from 3 years old down to 2 because I got a brand new account. So if you keep getting new personal cards, it's going to lower your average age of file, and you're losing points out of that 15 points. Now, it's different when it comes to business credit, and I love it. I love business credit. So I suggest if you have 2 personal credit cards, you're good, but then you can move to that business credit side, which is my favorite. But that's a whole nother conversation. The last one is inquiries, and that's basically anytime a bank wants to see if you're eligible, they pull a hard inquiry on you. Anytime you apply for an auto loan or something like that, it's a hard inquiry saying your score for 6 months, but it's only for 2 years. They stay on your score for 2 years, but it's only the ones that happen in the last 6 months that can negatively affect this 10%. So you're allowed to have about 4 inquiries in a six-month period. Now, when you're buying a house, you're working with a whole team. You're working with your realtor, you're working with your loan officer, and you're working with your credit repair if you need to, right? We will need to pull your credit. So we ask you not to do any unnecessary pulls while you're buying a house. Work with your team. We're going to do it in your best interest. Because if you get too many inquiries, then it will start to hurt your score. Did I explain that well? Yes. Very good. Look, this, yes. Okay, so yes, the credit world is so big. Yes. So there's a thing called shopping around, right? And it depends on what credit bureau you're working with. So like Experian may give you a shopping around period of a month where you can go to multiple lenders within that month, but TransUnion only gives you 2 weeks. So we say 2 weeks. You have a shopping around period of 2 weeks, okay? Where you can go to multiple lenders and have them pull your credit so that you can see who's giving the best loans, who's giving the best deals, right? But I always say just be a little careful on that because your realtor has already done the research. Knows what lender actually gets the job done. When I bought my house, Navy Federal was like 1% or 2%. And I was like, I want Navy Federal because that's like cheap, right? I literally missed out on 2 houses because they didn't get their work done. And I was like, you know what, enough's enough. And I went to my realtor and my realtor was like, they don't care, you know what I'm saying? And she put me with an actual person and I actually closed on the house I wanted. So you really want to be careful on the shopping around thing because your realtor has already vetted people, knows who's actually gonna close, who actually has the best deals and stuff like that. And if you ask your realtor can give you 2 options, but they're gonna push you to the one that they know, works or whatever. So yes, there is a shopping around period and that only happens with mortgages. There's no shopping around period for credit cards or auto loans. It's only with mortgages. Okay? Yes. Very good. Yeah. So American Express does have cards that have limits on it, and they have cards that are unlimited. I would say when you are building your credit, you want to get a card that has a limit on it. You want to get a card that has a limit so you can know exactly what 1 to 10% is. When you already have established credit, then you can get the unlimited cards, right? But when you're building your credit, you really want to focus on making sure it stays between that 1 and 10%. So the other thing about American Express is a lot of times people may help you by adding you as an authorized user on their credit card. And I would say never, you don't want to be added as an authorized user on an American Express. That's not the best opportunity because American Express, whatever day you're added is the day that card reports. So if you get added onto like a Discover and that card is like 20 years old, then 20 years of positive history goes on your credit report. If you get added on to an American Express, you get that month. It doesn't matter how old that American Express is. Mm-hmm. No. No. Business credit cards will not show up on your personal credit unless you default and you get late payments or something like that. Okay. So that is how, that's how credit works. Now, I'm going to pass on my cards. If you're interested, if you need any help or you know anyone that needs any help with their credit, we're really good. This is my passion, as you can see. I love this. I know I'm going to heaven because I've helped so many people. But is there any more questions before? Yes.
A person that has no score, and I'll speak to it later, but a person that has no score and would like to establish a credit score, what is the fastest time you've seen that take place?
Oh, it happens within like 35 days. But they have to get a card. So they would do like either a secured credit card or Fingerhut. I like Fingerhut. And it shows up within 2 weeks to a month. And once it shows up, then they're going to get a score. And then after that, then I would add another credit card, most likely like a Capital One or something. Because the secured credit card is you give them $200 or $300 and they give you back a $200 or $300 credit card. Again, even though you gave them the $200 or $300, you still got to keep that between 1 and 10%. And make a payment when the bill comes. And so after, usually, if they have nothing on their credit, once we get them the secured card or the Fingerhut, and then an unsecured card, meaning your credit is good enough where they can give you money without securing it with your own cash, their credit is usually good enough.
But when you're saying Fingerhut, are you talking about the actual little catalog?
Mm-hmm. Oh no, it still works. Because the thing is, people are like, I don't like anything at Fingerhut. I don't want you to go shopping, right? I need you just to get a toaster so that we can get this on your credit. And then, when I get them the $200 or $300 credit card, they're like, it's only $300. I only want you to buy coffee once a month. That's it. We're building your credit. A lot of people think that cards are, I get points. It's going to cost you more points if you use too much of your card. You know what I'm saying? So it's just changing the mindset of how we use our credit. All right. We good?
Anybody else have any questions for Bonita regarding credit? Any kind of curiosity questions?
Very good. Well, I'm glad I explained it well.
Exactly.
So I'm going to pass on my cards and everything like that. And if you have any questions, don't hesitate. Yes. Yes, it's really affordable, and we do monthly payment plans. It all depends on what's happening with your credit report. So we just got to see how long we think it's going to take. But we do guarantee that we'll get you to a 700 or greater while you're in the program. The program's about 7 months at maximum. As long as you do your part, and your part is no new negative items while you're in the program, and you have to keep your credit cards between 1 and 10%. Yep. If you do that, then I got you.
All right. Well, thank you very much, Ms. Bonita.
Thank you, Jay.
I appreciate you.